Hi students, so this lecture for BBA 4th sem on corporate accounting. In the last class we have done the half problem. Already we passed the what's the closing entries in the books of the transfer company, as well as we saw the preparation of the realization account, how to prepare the realization account. In the debit side, all the assets we have to record, and in the credit side all the liabilities we have to record. Okay, so now see the transferring company account we have to prepare. Okay, so on the debit side, the realization account we have to take, it means the purchase consideration we have to take. Okay, rupees 1,80,000. And the credit side, it is bifurcated like this: by equity share account is rupees 1,65,000, by bank account it's a 15,000. Okay, so like this we have to make the tally of the transferring company account. Now see the equity shareholders accounts also we have to prepare. Now how to prepare the equity shareholders accounts? So on the debit side, the whatever bifurcated, just we have to take. To equity share account debit, it's a 1,65,000, and to bank account it's a 15,000. So in the credit side, by equity share capital account, it means what's the why it's which whose we have to take. It's a Y companies limited, because the transfer companies we have to take. By equity share capital account is 1,35,000, as well as by general reserve account 10,500. By export project reserve it's a 6,000, and by investment allowance reserve it's a 3,000. Okay, so like this you have to take all these things. Sorry, it's going up. As well as it's the by profit and loss account 18,000, and by realization account 7,500. Like this you have to prepare the what's the equity shareholders account. Okay, so now see the third step, which is the incorporating journal entries in the books of X limited. Okay, so the incorporating entries means what's the opening entries we have to pass in the transferee companies limited. Okay, of the transferees company. The transferee company is which? The X company is the transferee company. Okay, so now you know that there are three steps. Which are those three steps? First step is what's to prepare the purchase consideration. Second step is what's closing entries in the books of the transfer company. And third step is what's the passing the incorporating entries in the transferee company. Okay, and so this is the last step. Okay, so one more we have to prepare, which is the balance sheets. Okay, later on we will see. First of all, see the incorporating journal entries in the books of X limited. So now see, according to your format of the incorporating entries, first one is what's for adjustment of purchase consideration. Okay, for the adjustment of purchase consideration, what's the journal entries? Business purchase account debit to liquidator or the transfer company account credit. Okay, so purchase, it means what? How to pass? Business purchase account debit is 1,80,000 to liquidator of high limited company account, it's a 1,80,000. So being adjustment purchase consideration. So this is the narration. Okay, so now see the entry number second, according to your format, what's for incorporation of assets, liabilities and reserve. Okay, for incorporation of assets, liabilities and reserve. Okay, so whatever the transfer, this all the values we have to take of this Y limited from the balance sheet. Okay, so business purchase account debit, it's a 45,000. Okay, so machinery account debit, it's a 51,000. Stock account, it's a debit 54,000. Debtors account debit, it's a 32,400. Okay, so it's a business purchase is nothing but the building accounts. Okay, so building account 45,000. Next, bank account 15,600. Preliminary expenses account 3,000. Capital loss account, it is the difference. Okay, 45,000. Now how it's got the difference of the 45,000? So now see here. So actually see here, so how it's got the actually the X company is going to purchase of the Y limited for the 1,80,000, and the Y limited's share is there. How many shares are there? 1,35,000. Okay, so paid up share capital of Y limited is the 1,35,000. So 1,80,000 minus 1,35,000, it's the remaining value is 45,000. So this 45,000 is the loss for the what's the X company. Okay, because Y company is getting 1,80,000, I instead and how many shares are there? 1,35,000 capital is there of this with the high limited company, and X company is paying 1,80,000. So this 45,000 is the loss for the X company limited. Okay, so that's why it is the capital loss account difference, it's a 45,000. Okay, so to 13% debentures account it's a 10,500, to creditors account it's a 12,000, to bills payable account it's a 3,000, to general reserve account 13,500, to export project reserve account 6,000, to investment all reserve accounts 3,000, to profit and loss account debit it's a 18,000, to purchase consideration account it's a 1,80,000. Okay, so like this you have to pass the journal entries according to your what's the format, actually according to yours the format. Okay, so what's the narration? So being assets, liabilities, reserve and premium expenses of Y limited transferred at book values and difference being capital loss. Okay, so like this you have to pass the journal entries. Okay, so whatever the remaining journal entries we will discuss in the next class. Okay, so thank you.